Why do you pay tax that doesn't make sense? Hello and welcome back to my channel. Today we're diving into a topic that's bound to ruffle some feathers and I'm sure for some will be controversial. There are many quirks with the UK tax system that are simply illogical, and today I'm going to tell you about some of them. Let's start with the most basic, my point number one, what I call the personal allowance paradox. So as of April 2025, the UK's national minimum wage will be £12.21 per hour. For a standard 40-hour work week, that's £488, and over 52 weeks, that's an annual income of £25,396. Yet the personal allowance, the amount you can earn before paying income tax, is only £12,570. Please take a moment to think about this with me. The government sets a minimum wage to ensure a basic standard of living of around £25,000 per year, but then taxes nearly half of it. How does that make any sense? Surely either the national minimum wage is set too high and should be reduced, or what I consider more likely is that the national minimum wage is fair, in which case the personal allowance should have a metric that means that it is always at least in line with the national minimum. Next up, my point number two, national insurance, or a tax by another name. National insurance, or NI, is basically a second income tax, except they pretend it isn't. There's simply no reason to separate them. Just call a spade and say the basic rate of tax on employees is 28%, not 20% tax and 8% national insurance. Employees pay 8% on earnings between £12,570 and £50,270, and 2% on earnings above that. Employers also pay their NI contributions, which are increasing from 13.8% to 15% on salaries above £5,000 from April. It's another stupid tax rule, but I'll cover that on another day. So why does NI exist separately from income tax? Well, both go into the same pot to fund public services, so it's likely just a way to obscure the true tax burden. And funnily enough, NI is higher for lower earners, being 8% up to £50,270, and then 2% on anything above that, which puts you in the top 50 to 20% of earners in the UK. And that brings us nicely onto my point number three, the inverted incentive for high earners. Basic rate taxpayers earning up to £50,270 pay 20% income tax and 8% NI, so 28% total. Higher rate taxpayers earning £50,270 and above pay 40% income tax, which is more than 20% and which you would expect given higher income in a progressive tax system, but only 2% NI, which is 6% less than the lower earners. The amount they then pay for income tax and NI combined is 42%. So that means the total tax burden doesn't increase as much as you'd expect for higher earners. It goes from 28% to 42%, which is still a 50% increase, but compared to the 100% increase that looking at the income tax rates of 20% and 40% alone would suggest, it's simply disguising the actual tax rates. Again, just be straight with people. At a time when inequality is rising, a lack of transparency is not a good look. My next point, number four, is favourable treatment of unearned income. People who have more money and are not living month to month on their salary are likely to have assets and investments, which those less fortunate simply don't. Income that people receive from investments or owning or part owning companies is called dividend income. Dividends are taxed at a much lower rate than salary income, so 8.75% instead of the 20% you pay on your salary, 33.75% instead of the 40% you pay on your salary, and 39.35% instead of the 45% you pay on your salary. Not to mention the effective 60% you pay if you earn over £100,000 due to the loss of the personal allowance. Again, another stupid rule that I won't go into now. Also, when assets go up in value and are sold, the profit is essentially income and subject to capital gains tax rather than the salary income tax you pay. However, assets that are sold also enjoy a lower tax rate with a basic rate of 18% compared to the 20% income tax you pay on your salary, and only 24% compared to the 40 and 45% income tax rates. So why does this matter? Well, higher earners and wealthier individuals benefit the most from capital gains and dividends. Lower earners spend their income on daily living expenses and can't really afford to invest in a lot of cases, meaning they miss out on these tax breaks altogether. My next point is number 5, the complexity conundrum. So the UK tax system is one of the most complex in the world. In my experience, complexity within finance is usually a tool to hide the truth, make people believe they're better off than they actually are, and create loopholes that favour the rich and powerful. The 5,000-page tax code is full of exemptions, allowances, and bizarre rules. But who benefits from all these complexities? Not the average worker, but rather those who can afford expensive tax advice to decipher it and make use of it. And to be clear here, I'm not discrediting or taking issue with the people who do so. My job involves helping them. So it's something I'm very good at and something I'll continue doing. Do I believe that the tax system is right? No. Is it up to me to change it? No. That's the job of the government. But when governments are run by some of the wealthiest people in the world, are they really going to change it? Russia's Vladimir Putin is reportedly worth over 200 billion. Donald Trump, 5 billion, and his puppet master Elon Musk, over 300 billion. China's Xi Jinping, 1.5 billion. France's Macron, 31 million. The leader of Thailand is worth around 250 million. Even Ukraine's Zelensky is reportedly worth over 20 million. But let's look at the UK. So Rishi Sunak was reportedly worth 600 to 700 million, and his family much, much more. But even now, the Labour leader, Keir Starmer, while not up there with some of the other names I've mentioned, he still has wealth of around £8 million, which puts him in the top 1% in the UK. So yeah, don't expect this to change in the near future. Inequality is a massive issue, and I'll be releasing a video on this soon, so make sure you subscribe to the channel to hear my views on how and why inequality is a risk to your children's future, even if you think you've built up a sizable helping hand for them, and why I believe that governments say they want to reduce illegal immigration, but never do. Believe it or not, I think they are linked. But just for clarity, before I move on to my next point, when I speak about inequality and what is causing it and tax breaks of the wealthy, I'm not talking about the working or middle classes. I'm not talking about people who go out and work their butt off, whether that be salaries of £20,000 or £30,000, or whether that be salaries of £100,000 to £300,000 a year. These people are not what I consider the problem. It is those with invested asset values of 50, 100 million, billions of pounds that I'm referring to. Anyway, I'll get off my soapbox and move on. My next stupid UK tax point is number 6, the VAT burden. VAT is a flat tax of 20% that disproportionately affects lower income individuals. Essentials like gas and electricity are taxed, while financial services and luxury goods get a zero tax advantage in many instances. Caviar, 0 rated. Toilet paper, 20% VAT. Tell me how that makes sense. I won't go into any more detail after my last rant, but my next point is point number 7, the uncertainty of ever-changing tax laws. If there's one thing businesses and individuals hate, it's uncertainty, and the UK tax system is constantly changing. In just 3 years, we've had 4 major corporation tax changes. So employer NI has changed twice in 2 years, and it's about to change again. The government increased the corporate tax rate, then introduced marginal relief, then froze the thresholds. It makes long-term planning nigh on impossible. Businesses can't plan ahead when tax laws change at the whim of every new government. In my view, a minimum 10-year stability rule should be in place for tax policies, and any intended changes should be announced at least with 3 years in advance to allow businesses to plan and thrive. The UK already struggles with businesses, investment, constant tax changes. This brings me to my final point, number 8. the corporate tax mess. UK corporation tax rates depend on how much profit a company makes. So small businesses making under £50,000 pay 19%. Larger businesses making over £250,000 pay 25%. And businesses in between pay a weird marginal rate of 26.5%. So why the unnecessary complexity? In my view, just a simple flat corporate tax rate would be much better. One of the biggest issues business owners have is being taxed twice on their same money. So a business owner pays 25% corporate tax on profits in the company, and then up to 39.35% on dividends after tax. So you can see their point. In my opinion, a fairer approach would be to tax all dividends in line with income tax rates, while providing a tax credit for the corporate tax already paid. So if someone receives a dividend of, say, £60,000, this would have been £80,000 before 25% corporation tax. Therefore, when their tax bill is calculated, they should gross up that £60,000 to the full £80,000, but then apply the £20,000 credit to the final tax bill. That would eliminate the frustration of double taxation for business owners. So they are some of my issues with the UK tax system, and there are many more. But as a UAE tax resident who left the UK, I don't want to come across as a bitter ex, so I'll save the likes of inheritance tax and stamp duty for another day. But in fairness, I would say the UK has a tax system in desperate need of reform. It's complex, inefficient, and an illogical mess. It overtaxes lower earners while handing tax breaks to the wealthy, hides the true tax burden through sneaky rules like national insurances, punishes small businesses with ridiculous tax layers, and creates uncertainty with constant changes that discourage investment and growth. So, in my view, the solution is simplification and fairness. If the government wants people to feel like they're paying their fair share, then they need to stop overcomplicating and obscuring the truth. But that's just me. What do you think? Have you been affected by any of these ridiculous tax policies? Let me know in the comment section. And if you found this video insightful, don't forget to like, subscribe, and hit the notification bell. And I will see you in the next one. Bye bye.